What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis on some of these tickers here. On the left, we have the broad market comprised of SPY, the Qs, and IWM. After that, we take a look at some companies: Apple, Netflix, Tesla, Alibaba, Facebook, NVDA, ROKU, Microsoft, AMD, McDonald's, and now our recent addition, Amazon. If you'd like to see me add anything to this list, let me know down below in the comments section, or feel free to shoot me an email. And with that, let's get started on the broad market. All right, so jumping right into our SPY weekly chart, I would like to point out our bit of an indecision candle here put in this week. We did have a shortened week, only 4 days trading this week, but we still maintained a higher low than our prior week, and we put in a higher high. So the uptrend is intact. We are still hanging on to this very key level here at 286.63. That's the major level that we need to see hold as support continuing forward if we're going to see new all-time highs. And with that, I would say, again, we didn't quite get the momentum carry through that I thought we were going to get last week, but we'll talk about that in a second when we look at another chart. But I think it's more than likely that it happens again over the course of either this week or the next, or in the very near-term future. I don't think that we're going to see any significant reversal until we come up and at least test 293.94. Zooming back into the daily chart on SPY, just to get a little more clarity on what the week actually looked like. We had some red days. We actually had increasing red volume. However, on our Thursday, last day of the trading week, you can see we have a pretty big tail there compared to the body. We have a doji. So I would have to imagine, instead of all that volume being selling pressure, there is indeed some buying pressure, showing that buyers did show up around this level and bought the prices back up and closed towards the high of day there. So not quite convinced that the reversal is put in yet. I do, again, think we are more than likely to come and see our all-time high here at 293.94. So some reasons why SPY had a weaker week, no wordplay intended there, but XLV, our healthcare sector of SPY, had a nasty week, selling off pretty big here. However, we do have a hammer candle here on the daily chart at the lower Bollinger Band. Doesn't quite line up with our support down here from back here at 1.3. However, it is after a significant sell-off, so I would imagine some sort of bounce coming here as we consolidate and sort of the market digests this move. XLV, one reason why the market sold off. XBI. So the biotech sector, a very, very similar story here, selling off pretty harsh, but we do have a very nice hammer coming right into our previous level of resistance, now converted to support. So I'd watch for a bounce in these two sectors. And the ones we've been talking about most recently, XLK, still very nice uptrend, no significant pullbacks yet. You can see the tails on all of these candles here. It looks like bulls are still stepping up and buying the prices as they dip. And financials enjoying a nice green week also, as most of the earnings reports for financial businesses were positive. And lastly, our last internal sort of gauge, if you will, the VIX. We are still seeing lower highs and lower lows, which is a good thing, letting the market sort of dribble back down into a very comfortable state where it can just continue to grind higher. If we see any sort of pops in here, we are looking for a lower low, or a lower high rather, anything lower than 1430 just about based on this high in here. And it would be fine if we saw support down here at 11 just about, but again, just dribbling and grinding higher. Moving on to the Qs, essentially the NASDAQ ETF here. You can see we're still sort of testing out the upper range of our rising wedge. No problem here. We did set a new all-time high at 187.93, so we did breach the 187.53 level, and now it looks like we're consolidating around it. Again, nice tail on the candle, showing that buyers are still stepping up in the after selling pressure is there. No significant red volume, or as much as SPY anyways. I would imagine that we see, again, prices just continue to move higher until there's a real strong sell signal and we see lots of red, or we start giving up these lows and start putting in lower lows and lower highs. Alrighty, and IWM is the one that is sort of lagging here in all of the sectors and sort of ETFs that we watch for the broad market, representing more of the small caps and smaller companies. We are seeing a very clear top here in resistance at 158.12. We were never really able to get back into our thick resistance zone between 158.12 and 158.95. That being said, we do have a hammer here off of the middle Bollinger Band as well as 50 SMA. So some sort of bounce may be in store, but we do have that 200 SMA resistance right above. So we're in a in a bit of a pinch here, if you will. We have the resistance trend line. I'd say based on this price action and based on the resistance overhead, a continued move lower is in store for small caps here in IWM. If we do go lower, we're looking for support down here to be held at 148.28. Anything lower than that is pretty detrimental here to IWM. We're looking at 144.96, and essentially just sort of giving up some of this consolidation after a big move up. Already getting into our companies here, starting with Apple. We got the move we wanted to see. Hammer off of support down here at 197.57. We got the continuation higher, and now we did break above our prior high here. So what looks like it could happen on Apple is a run up to 215, our next resistance level. If the market continues to push higher, more than likely that we see that run up to 215. If we get a bit of a rollover, though, I'd like to see this level really act as support again between $200 and 197.57. If this level holds up, that would be any sort of viable pullback there. Anything lower than that is more of a reversal. I'd like to see the 200 SMA act as support. We're sitting at 191 right now. That will, I would imagine, continue to get slightly higher over the course of the week. 50 SMA catching up nicely. Anything more, again, than the 200 SMA on a pullback is more of a reversal, and we're looking at 185.62. 50 SMA coinciding with that for a super support if it can get down there, and then 175.74. Next up, we have Netflix. Netflix had earnings. We had, again, this just illustrates the beauty of charts. If you were watching the charts, you would have known that there was a perfect support down here at 342. Could have bought this and had a nice day trade there. Continuation higher, and now it just looks like we've sort of gone sideways for the last 3 days, making no real progress in the downwards direction or upwards direction. So it'd be interesting to see what happens this week on Netflix. If we can get back pushing in the upwards direction, we got to get back above this trend line. This is going to act as resistance now that we're below it. If we can get back into that zone, we're looking at 371 to act as resistance. If we can't and we get rejected here, we also have the 50 SMA coinciding sort of with the highs right now, so that might act as resistance as well. If we could turn to the downside, we're looking at support to generally be found right down here around 350. Anything lower than that, again, we're looking for the same level down here at 342 to hold up. And if we go lower than that, that would not be that great for Netflix, but we're looking at the 200 SMA. We do have a potential resistance trend line to be drawn in from our highs here. If we do something like that, we can get a general idea of where the resistance might show up. So again, some key levels here to break through some of these trend lines and continue higher, or break down and sort of find support at these levels that are very prominent on the chart. Tesla is continuing to play nicely in its sort of symmetrical triangle. We do have some bearish momentum behind us. We are on a downtrend. You can see the 50 SMA is clearly sloping down. We have a clear resistance trend line. Whether or not we get a breakout to the upside or the downside, bears are sort of favored because we're in the downtrend. However, if we get a breakout to the upside, we have resistance right overhead at 379 just about. Anything more than that, we have the 50 SMA coming down on us. We have 293.88, some of these highs in here to act as resistance. If we fall down and start making a move to the downside again, we're going to look at our levels here at 258.78. Anything lower than that is our next low on the chart down here at 254.25. And anything lower than that, I would imagine the 250 psychological support level would act as support and sort of give a little bounce on Tesla. So keep your eyes on this one. Again, not very much room in the pattern left, and something will have to happen sooner or later. Alibaba sort of just chopping around as it has been for the past little while. It does have a small uptrend building. We have the 50 SMA and our support trend line sort of coinciding at this point. We don't really have much in the way of, we had flat price action over the course of the last week, finding support down here at 183, and now it looks like we have resistance back up here at 188. So again, just playing these levels that we have mapped out. If we can get a breakout over this 188.04, and then this looks like a pretty key level too at 189.80. So if we can get a breakout over this sort of zone, let's draw that one in real quick. So if we can get a breakout through this zone, I would imagine we come back up and test our 198 resistance level. Again, if we get any sort of pullback, we're looking for our supports and 50 SMA to sort of give us support and give us a little bounce. Next up, looking at Facebook. Facebook is continuing to build pressure underneath our 179 resistance zone. We do have a hammer here on Thursday rather, the price action on Thursday. So if we can get the bulls to really step up, again, market to continue moving higher, it makes sense that we would break through this resistance zone. It looks like we have some highs breaking through that level there. So if we can get through this resistance, our next stop is 188.30. Any sort of pullback, it's key that we see 174 hold on the chart now that we've sort of been above it and consolidated above it. We don't really want to see the price get back down in this level. If we do, it looks like we're sort of giving up some of our strength from the gain. So we would look for, again, a bounce if we get down to this level. If that gives up, again, we're looking at more of a reversal here. We want to see the 50 SMA act as support on the way down and the 200 SMA. If we get back into this range and fail around this level, very easy target down here back to the lows of our double bottom at 158.86. There we go. All right, NVDA. Again, sort of just a sideways week. We had big down pressure. Again, some odd gaps, gap up, essentially just going sideways on the week. We are back below our 188.63 level, though. So what we can do now is sort of draw in a new resistance up here. And get rid of this one. So we'll remove that. And you can see, and we now have a support here at 183.07. It would be nice if we see a bounce off of this level. That would be a nice pullback on this bullish move here. If we see a continuation, we want to see a breakthrough of our 193.63 resistance. After that, again, we have our 200 SMA on the daily barreling down on us at this point. That will start to catch up sooner or later. It's starting to flatten out now, but keep that in mind on resistance. Again, $200 psychological level is there. On the downside, we want to see if we see a break of this level here at 183. We want to see support coming back into play at 174.30. Anything lower than that is not going to be good for the chart. Essentially sending it back down into some of these levels down here. These highs are coming in right around 164.71, 165 just about. So keep that level in mind on the downside if we give up some of our key supports. Again, just a sideways week for ROKU. No real clear indication of what will happen this upcoming week. So in that case, again, we're looking at resistance to come into play at 59.76 on the upside. Again, a resistance trend line now that we are below it here. So keep that one in mind as you trade it. If you trade it throughout the week, 50 SMA is right above us. So a little bit of resistance on the upside. On the downside, we have two pretty close supports. A key one, the 200 SMA on the daily, is coming into play right around 53.19 at the moment. If we continue to see a breakdown below that, we want to see 50.93 and even $50, the whole number, psychological support, act as support there and give ROKU a little bounce. If that gives, let's see, we haven't really gone and talked about this chart too much. It looks like we have support somewhat down here. We had sort of a double bottom on these two tails right around $45. Let's just call it 45 there. Nice whole number. And then if you want to get real nasty and expect a crazy move on ROKU, we have support way down there at 36.52. So some areas to keep in mind there. Microsoft but breaking out of this level this week, which was great. Again, we were talking about blue sky territories. It just sort of has some room to run now. Our next psychological level is at 125. That is just overhead, so maybe it wants to just get pulled up there like a bit of a magnet. If it does, that's fine. We just want to see a continued consolidation around that level. No real breakdown off of that level, and again, the uptrend will remain intact. If we see a pullback off of that level, we want to see support right around 120.85 based on our highs here. Anything more than that, we're looking at a pullback into this support trend line that we have drawn in from the lows back here. And yeah, that's sort of Microsoft. We're in blue sky territory. Keep your eyes on the whole numbers as we continue in the upwards direction. AMD sort of caught in between two levels, sort of consolidating here, going sideways. It's going to be pretty key to see whether or not we break out to the upside of $28 or fill the gap all the way down here and break down below sort of 26.77. If we break down from there, I would target the other end of this sort of zone, which would come into play at 24.62. If we break out, again, looking to come back up and test our highs right around $30. There's not much in between. There does look like there's some resistance right around 28.36. So just keep that in mind as you trade throughout the day. Wow, McDonald's. I hadn't looked at this chart, but we have quite the boost here on Thursday. coming right up to our whole dollar there at 195. Again, we're pretty much in blue sky territory for this one, so we're playing the whole dollars. If we see any sort of pullback, this time we don't want to see anything really lower than this high here. If we see that hold on a pullback, that would be great. That is at 193.15. Anything lower than that, we're looking at a move back down here to 190.68 based on some of our highs here and our high here. And then if that gives, then we've really saw more of a reversal than a pullback on the move, and we're looking for some levels to come into play like 188. And then, yeah, let's see, where's that line up? Yeah, not quite. I would play this hammer as it's more recent than our high here. And then again, another level right below it at 186.67. So some levels of support on the way down, but again, we're looking at resistance of whole numbers on the way up. Alrighty, so starting off on our Amazon technical analysis here, I haven't marked up the chart at all yet. We're starting off on the weekly chart just to map out some key levels of support and resistance. It looks Alright, so sort of zoomed in and looking for some more specific levels relevant to recent price history. We have this level here based on our high here. We're just going to get rid of this level, actually. We're going to remove that one because clearly this level is a little more important down there at 1747. Our high is more important there. Again, you can see how it acted as support now that we were above it here based on this candle here. That looks good. And then what I'm seeing are some trend lines that could be drawn in. We have a support that looks something like that, and it looks like we have some sort of resistance that looks something like that. So if we zoom in, we can see we're testing that upper resistance level. We're either going to see a breakout above that level, and it looks like 1900 is looming right ahead, so maybe we could see a move to 1900. That level act as a magnet on the way up. Again, that would require a breakout of this resistance level. If we see a pullback to the other end of our rising wedge, maybe we see somewhere around the level of 1800. Again, I haven't really watched Amazon too much, but these are some technical levels to pay attention to on the daily chart here. I'm not sure how well it respects its whole numbers. It looks like we're sort of in no man's land here at 1747. Maybe you could call it 1750. But again, nothing really standing out to me here. So again, we're just to keep in mind in the broader scheme of things, we are at a resistance level. It would be fine to see a pullback into our support trend line. It would be fine to see a pullback into our support level based on 1825. And then if we see a breakout, again, we're looking at $1,900 on the upside. Alrighty, so that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned something, leave a thumbs up. If you think I missed anything or would like to see something else covered, let me know down below in the comments section. And as always, subscribe for more of this content. I wish you a green trading week.